Hello friends, my name is Dr. Bharath Chandra. Videos are meant for the benefit of society. Today's topic, which is more profitable, short term or long term? One of the biggest confusions that investors have is whether long term is more profitable or short term. Many people believe that short term trading is more profitable since it is very quick and also most people talk about it. Even TV experts, brokers, and most YouTube channels recommend short-term trading for reasons best known to them. And they go to the extent that in 2 weeks' time, if you are making 10% profit, then it becomes monthly 20% and yearly 240%, etc. etc. If you know technical analysis well, in short-term trading, you can expect 25 to 30% per annum. On an average, there is a chance of higher profits in certain years and there is also a chance of small losses in some transactions. However, in short-term transactions, you will not get the power of compounding since you will be buying and selling regularly. Also, the tax on profits made in short term less than 1 year is 15%. Usually, the profits made in short term are spent for expenses to improve lifestyle such as mobile, vacation, household expenses, etc. So the profits made in short term are not helpful in creating wealth for ourselves, hence does not significantly change our life. Let us assume that an investor makes 30% profit consistently every year, pays 15% tax on the profits and brokerage and government and stock exchange charges. The net profit after tax will be 24.5% per annum. If you make this profit over 30 years, then total profit will be 24.5 into 30 is equal to 735%. So, if you invest rupees 1 lakh, you will make 24,500 profit every year and total of 7.35 lakhs in 30 years as profit, and you will have rupees 8.35 lakhs. Now there are several assumptions and observations. Number one, we assume that the investor is very talented, makes consistent 30% profits every year from short-term trading. Number two, he does not reinvest the profits earned. Number three, he does not incur loss in any year. Number four, short-term trading does not cover the entire appreciation of a stock since it does not suggest us to hold the stock throughout the period. Example, we may buy a stock at rupees 100, sell at rupees 130, then next buy indication may come only at 150 and so on. On the other hand, long-term investing is quite different. Selling the stock is very rare and many times stock may not be sold 10 to 20 years. In long-term transactions, you will get the power of compounding since you will be buying and holding for long periods and the profits stay reinvested. Also, the tax on profits made in long term more than 1 year is only 10% and the first 1 lakh of profits in every financial year is exempt from tax. Usually, the wealth made in long term are used for children expenses, own house, retirement, own business, etc. So, long term investing has the ability to significantly change your life. If you know fundamental analysis well, in long-term investing, you can expect 15 to 25% per annum on an average over a period of 10 to 30 years. The longer the period of investment, the higher the appreciation usually. Now, long-term appreciation. Titan Company, rupees 7 per share in the year 2000. Today's approximate price, 2500. Duration, 22 years, 8 months. And the returns in CAGR before tax, 29.61. Total profits, simple interest before tax, 35,614%. Now coming to the stock Asian Paints, rupees 17 per share in the year 2000, now 3,500, 22 years, 8 months, it works out to 26.49, and the total profit, simple interest before tax, is 20,488%. Now, assumptions and observations. Number one, success rate of investors is much higher in long term than in short term. Number two, assumed that the investor has lot of patience and discipline and is a good in fundamental analysis and monitoring stocks. Number three, since there is no frequent buying and selling, the transactions cost and even tax has a minor impact compared to short term. Number four, most of the time short-term investors miss the dividend paid by companies since they don't continuously hold the stock and may not be holding as on dividend record date, and dividend is 1 to 1.5% per annum extra apart from capital appreciation. Number five, even if you get only 15% per annum returns in long term, the compounding effect will make it more profitable than short term. Let us assume that you bought 100 shares of Titan at rupees 7, sold at rupees 2,500, profit per share 2,500 minus 7, 2493, total profit 2493 into 100 is equal to 2,49,300. Tax exemption for long term is 1 lakh per annum. So 10% tax needs to be paid. That means you have to pay a tax of 14,900. Net proceeds works out to 2,34,000, and after paying brokerage and governmental charges, it comes down to 2,30,000. CAGR works out to 29.13% after tax, and the total profit in simple interest after tax is 32,757%. Now the summary in front of you. Rupees 1 lakh invested in Titan in year 2000. Today's value 3.57 crores. Duration 22 years and 8 months. Return CAGR after tax 29.13, and total profit in simple interest 32,757%. Short term 1 lakh invested in 2000, 6.51 lakhs and 22 years and 8 months, and it works out to 559%. Finally, at the end of the video, please type in the comment section which one do you feel is better, long term or short term. If you are not the member of Stock Market Academy channel, this is the time to subscribe, press the bell icon, send this video to all your friends, and the video is good, press the like button. Thank you for watching. Bye bye. All the best.